Okay, welcome everyone to the Pro Trade Room Plus and the FOMC Statement. My name is Lee Goldstein, the Trading Director at 10 Minute Trades. Please remember, all the trades we discuss are for educational purposes. It is possible to lose money trading futures. I'm not a financial advisor, so please trade carefully. Good afternoon, everybody. Let me know you can hear me. Welcome everybody on YouTube. Thanks for joining. Hit that like button, hit the subscribe button so you know when the next stream is. Let me know that you can all hear me. Let me know you can see that handsome face, and we will get started right now. Can you see the screens? Give me a heads up, everybody. Okay. Thank you, Arthur. Thank you very much. Okay. So, this is a very interesting FOMC because you now have a Fed, you have a different political party coming in, and it kind of makes this a little bit unusual. It's not your typical Fed statement because they're not going to have the same boss next quarter. Not really a quarter, but the next Fed announcement. So who knows what they're going to do? I mean, the feeling is that they're going to cut rates a quarter of a basis point. That's what's priced into the market, so they say, and that's the expectation. The expectation is cut the rate 25 basis points. Right now, it appears that inflation is under control. Prices are a whole different matter. And that's the one thing that the Biden people did not understand. They thought that they could lower inflation and ignore the prices being high, and the electorate would love them. But that's just incredible short-sightedness. Hard to believe that they could be that short-sighted, but we all know because we're out here living our lives, and prices are very high on quite a few things. We know it, and it is the way it is. And that's the issue that I don't know that anybody can solve it, because how do you get companies to reduce their prices? The only way that happens is in a really bad recession. Otherwise, they just raise and raise and raise. It's just the way it is. That's how capitalism works. If they have an excuse to raise, they're going to raise. Okay? That's the way it works. Companies are going to raise. They don't care. So that's something that we know because we live with it. All right. So that's just an issue that in some ways I'm not sure how it's going to affect what's happening today, but it's just informational. So it is expected that we're going to see a 25 point, that'd be interesting. 25 basis point cut, 4.75. Right now, this particular event is considered a coin toss in how we look at it. I have to be, full ultimate transparency. This is, one of the most potentially volatile
Fitch
and
says
risky
tax cuts could
reports
add to U.S.
that we
deficit
have.
pressures.
And it's only because it could respond in a way that the market just goes haywire. So you just have to, if you're going to trade it, if you're going to trade it in cash, margins are up. So keep that in mind. If you're going to trade it in your prop account, you know, be aware that you could get a market that freezes. Your charts could freeze. Look what happened to us with Qualcomm. We made money, but Qualcomm
Okay,
yesterday, our
welcome everyone
charts froze.
to the Pro Trade Room Plus and
It's not
Qualcomm earnings.
uncommon on ultra fast events. It's it's not like it happens all the time, kind of situation, but it's not uncommon in that we're not surprised if it happens. And in other words, we don't look at it and go, what was that? I've never seen that before. That's not what happens. Look what happened. It was, I mean, I was surprised that it happened with Qualcomm, but in retrospect, if you think about time of day, volume of orders, potential liquidity problems, it was a perfect setup for the market, which is now not responding to my orders. You could see prices going through the orders. The charts actually didn't freeze, which was a little bit different. It was the orders that froze. And what's interesting about that is that might be related to, you know what? I'm not going to say because I don't know. I don't know. That is different than what we've seen before, at least from my end. My charts did not freeze. It's just that my orders were so delayed that I couldn't believe they still got filled. And there was a very good move in the earnings. It didn't really affect the trade negatively. I still was able to make money. And yes, the FOMC is the highest risk that we associate to a trade. It's a high risk event. You have to be willing to, explode your account if you're going to trade it. Now, it usually doesn't happen. The funny thing is every time we expect the worst of the worst volatility, explosive markets, it's almost always mellow when we're expecting that. I don't know what to expect today. I'm willing to take a trade. Um, Usually, if the brokers raise margin and it's a tremendously potential for volatility and surprises in behavior of the markets, those are proper times to reduce risk if you're going to trade at all. The beginning trader should not trade this report because you just don't want to trade the riskiest of the riskiest when you're just beginning. You want to just practice on the mellower trades. But I'm going to trade this with one contract. Normally, I would only do two. It's not like we're taking, so much risk, but we have a large stop. The stop is 80. So let me show you how I'm going to set up the trade. It's a breakout trade. And I mean, I want to be completely transparent about everything. I I'm 112 years old and I have three arms. That's being transparent. Truth, full transparency. This trade, I never in my life lost more money than on any other trade than this one. Um, this and so what is that? Does that scare me? Does that prevent me from trading it today? No. The funny thing is I don't even really think about it other than to just tell you, hey, I know what it's like to be on the wrong side of a difficult trade. Um, the market went haywire that day, but it was me that ruined the trade. I tried to revenge it and I doubled my loss. So it still had a very difficult trade, but you don't want to try to revenge trade a difficult trade. Okay, so follow your rules, follow your plan, be calm, be smart, proper risk. Don't panic. If you're not comfortable, cancel the trade. Okay, I'm going to trade one NQ with an 80 bracket, and I'm going to go for a 100 tick target. Okay. No, I'm going to do what the DMM says. I'm going to go for the 80 tick target. Okay. I'm going to follow the DMM 80 tick target. So I'm going to go for target two. All right. I'm using an 80 tick stop, and if the market should move 50 ticks in my favor, then I'm going to move my stop to break even plus 30. Okay? That's what I'm going to do. All right? And I will look at your question in a minute, Arthur, I promise. So, if the market should move, and I'm thinking maybe I'll do 40. This could be very volatile. Um, I'm going to leave it 50. If the market moves 50 ticks in my favor, move the stop to break even plus 30. I recognize that this could, I'm trading it in my prop account. It could damage my prop account or it could give us a great profit. We've had some nice FOMC trades. We've had some miserable FOMC trades. It's had a couple of stops in a row. I think the FOMC owes us a nice move. So I'm looking forward to a good trade today. All right. So 13:59:59 is the activation time. Normally, I don't anticipate to be filled early or anything like that. I don't really anticipate an early move. 80 bracket, 80 target, 80 stop. 80 is the magic number today. All right. If the market should move 50 ticks in my favor, move the stop to break even plus 30. I'm going to label this breakout BRK, BRK, okay, or BRKK, doesn't matter. And I'm going to trade it. Let me just save the template. Okay, so I have it saved. I rebooted before the trade. Everybody, please make sure that you've gone to www. Buellnox, www.timeis, www.timeis to check your time sync. Caesar, I'll get to you in 1 second. So Caesar, if I was going to trade this with the MNQ, um, I would do I'd do the Calvin way. I'd do an 80 bracket with a 200 tick stop, and targets should be your choice. Okay, targets anywhere between 30 and 100. All right, but I would definitely use a 200 stop, and I'd use the 80 bracket on the MNQ. That's how I would personally trade it. Let me just think for a second. So I want to check our brackets, right? We want to check our brackets. Sorry, I'm just checking for emergencies. Okay. So what do I mean by check our brackets? I'm going to set our time to 0 and do a quick bracket management by turning on the trade.
Order submitted.
Okay, and just managing where my brackets are going to go. Now the market's very bullish.
Order canceled.
Today. The market is very bullish. So now I'm going to put my time back to 13 to 1400 hours event. All right. I'm going to choose the account I'm trading in. Okay, put my charts on the account I'm trading in and enable my trade. Okay, now there are some other opportunities available if you're interested. So, like I was saying before, MNQ. If someone is interested in trading the MNQ, what you might want to do is use a big stop, a 200 stop, and then an 80 bracket and a target anywhere between 30 and 100. And if you're trading two contracts, I might use something like 30 and 80, somewhere in there. It could move 300 ticks. We don't know. But if we're lucky enough to get a move that is not ultra fast, you might have time to trail your stop. Okay? So if you have time to trail your stop, that would be a good thing, right? So I'm just trying to decide what I want to do with my charts here. Gold is also a potential after the news trade. So you could set up MGC or GC, okay, as a reverse continuation. I would do one position. I would do a 40 tick target. I'm going to do two positions because it's micros, and I would do a 40 tick stop. Okay. This is a gold MGC after the market trade, and I'm labeling it GC after. Okay. GC after. Apply it. Okay. So I've got this chart over here, a possible GC MGC after the news. All right. That's this baby. And when you enable an after the news, a reversal continuation, we get our instant long, instant short buttons. So you can trade discretionary. When you want to enter, right, you would press instant short or instant long. Okay. Now, my second possible setup, I mean, I'm really just going to trade the NQ as the trade because I'm going to watch that one super carefully. MNQ. So if you're interested, and this is, I have to say, this MNQ setup is completely untested. I just want you to know that. We have not tested a 200 stop on this report with the MNQ. Our NQ is our tested setup. Okay? That's our tested setup. If I were going to try something, if I wanted to try a lower risk setup, I would try, but you be prepared to manage it if it's very volatile. An MNQ breakout, 1359, 59, and the bracket is 80. And I would have a target somewhere around 30. And 80-ish. The stop is 80. I would move my stop to break even if it hit the first target. I think that it's wrong to hold a call with Trump. All right. And I would make sure you label that trade. To restore contact. I'm not against it. And then you want to do your bracket management. Where we see the release of the U.S. interest rate decision. Apply it. And to do your bracket management, I put my time on 0. Right. With this, we see the release of the FOMC rate statement. Some more commentary ahead of this from Bank of America now. Time is on 0. Cut rates by 25 basis
Order
points,
submitted.
Barring a big surprise. Shrink the brackets so they're manageable. Okay. That's
Order
manageable
canceled.
brackets. Chair Powell's message in the press conference should remain optimistic. Then I got to go back. Put my MNQ time. Data dependence once again. 1359. About the policy path. Regarding the election, and MNQ, I'm not live on it. That would be a breakout possibly instead of the one I'm doing. Okay. I'm not interested in trying to do two breakouts at once on this report today. But we could sample that one. So we have a possible MGC, depending what the market does. Okay. But the main thing I'm going to do is try to manage my NQ. what I'm anticipating, I could be completely wrong. There's no way to know what the market's going to do, how it's going to respond. We all know that. Just to give an example, let me show you last quarter. It's not a quarter. The Fed is 8 times a year, so it's a little bit more than monthly. So last month, now I do got to tell you, I have something. Well, I'll tell you later after the trade. So this was September. Last session with the Fed was a stop. The last two, you could see it on the DMM, they were stops. That's assuming using our exact setup. I could be completely wrong. Now, that, depending on if you got a good fill, may not 100% have been a stop. If you had gotten filled short, you could have made money on that. Okay. I don't always trust the breakout to tell me. But that was not that fast. So that was a possible okay trade, to tell you the truth, in terms of the speed. Now, into July, take a quick look over at July. And July was just not a very interesting move. So, what I'm expecting today is, because I think there's so much worry, the brokers have raised margin rates, which they normally do on this event anyway, but everybody's thinking, what are they going to do? This is going to be a problem. You could see it was a whippy event 2 events ago. I just think that we're going to get a normal, not that crazy kind of move. That's what I'm thinking. Now, look, that doesn't mean that I know. It doesn't mean that I have any slight idea that I'm going to be right. I just think it's going to be less volatile than what's expected. What do you think? Type in what you think. Arthur, do Apex Bulonox pay the higher costs to pay for sufficient server power to deliver both data and property accounts raised, simulate the real market? Arthur, so I wouldn't really know the answer to that question. All I could say is um, they deliver. They don't deliver the data themselves. The data is delivered from Rhythmic or Tradeovate. They, from what I understand, do supply the servers, right? And that stuff. Most of the time, we don't see lockups. It's pretty rare. That's the first time I think I've seen a significant situation where my orders were on the chart and didn't fill. And I was not the only one. Okay. Had I been the only one, then I look at my own computer for speed issues and, is my internet speed test working great? And I certainly wish we didn't make this new high now.
Do you see the release of the US interest rate decision? Median forecast sees a 25 basis
I would
point
have
cut to
preferred if price would have
4.75%
hung
from the
around
prior 5%.
down at 80
Also, with this, get the FOMC rate
rather than
statement.
going all the way
A
up
quick
here
note from JP Morgan, who
before
notes
the
that the Fed is
trade,
on track to deliver
before the
25 basis
news.
points cuts this week. And if data stays in the same range, that JP Morgan see it as likely being another 25 basis point cuts in December as well. They note that the labor market
I am
remains more
listening to the
important
news
than
in my
inflation for the
headset
Fed,
from
and with all
Financial
the
Juice.
noise
I
from
love their
Friday's
Squawk
NFP
Box.
not impacting the unemployment rates, the December NFP takes on
Remember,
increased
I have
importance,
gold
meaning if we see the
that I'm
unemployment
looking
rate
at
fall
on
below
the right.
4% at that
This is a
December
very,
non-farm payrolls read,
it's a
it will
hard
be a challenge for the
trade
Fed to cut rates,
to take a
and they may look
secondary
to skip a
trade.
meeting,
It
possibly
just
a
is. You
possibility
never
that was raised
know
by Fed
when that,
Bostic. So
if
that
it's going to
skip
happen,
a
if a
meeting being in
trend is
reference to
going to
the
take
December
place, if it's going
meeting,
to
they do see
chop
a
for
25
30
basis
minutes.
point cut
And
at
I
this
say
meeting,
30
just to
minutes because
clarify.
after 30 minutes, there's the news conference. Everything stops at the news conference. It's a totally different trade. It's not the same event anymore.
Putin says that Russia and China's mutual trust is at its peak. China's economy model is very effective.
So now it's just a waiting game. We're watching the markets. We're watching our volatility. Our bracket is certainly big enough that 80 ticks would not normally get filled early unless there's a huge whip before the news. But you should always be prepared in a trade like this to use the software tools that we built in, the adjust button. When you put your orders on the chart, should there be a big move or a big difference between zero level, right where the arrow is, which is the zero bracket. In other words, we have an 80 bracket, and the arrow appears when the orders appear on the chart, right? When that happens, if your price is heavy to one side, looking like it's going to fill before the news comes out, the adjust button can be pressed to recenter the brackets. That was the whole pernt of the adjust button, as Archie would say. The whole pernt, Edith. Showing the age. Showing the age. All right. So now we only have 2 minutes. It got so quiet. I'm whispering. Okay. I have a very loud voice. All right, so we've got 1 minute and 40 seconds. The market is, moving around a bit. Does it matter so much what the Fed does now? Who knows if they're going to be the
Putin
Fed
adds that
in
Russia's
place
and China's energy ties are developing
for
actively.
very long, if you know what I'm saying, right? Their influence may be not so meaningful. This is meaningful no matter what, because it's still the Fed and it's still the rates. Maybe they'll
So 1 minute now to get the US
overcompensate
interest rate
because
decision and the
they
FOMC
won't.
rate
They don't do
statements.
that
1
kind of
minute.
stuff. But who knows what's in their minds, right? All right, so we have a pretty big bracket. It's now back to almost where I think it's back to where it was when we first really started talking about things. I was thinking that
10
I'd
seconds.
rather have some space going up to the high, and now we have that space again.
Order submitted.
Cut 25 basis points.
25 basis cut.
Cut to 4.75%.
And there's not much of a response.
So the Fed
Gold had a
the
little
committee
bit of a
judges,
response.
risks to employment and
What did
inflation
I
goals
say?
are
I
roughly in
thought that
balance.
we would
Statement
really.
omits references to
I don't
having
know
gained greater
that I
confidence
want
in
to get
inflation, moving
filled. I'm
diplomacy back to
probably
target.
gonna let
The
it.
committee judges risks to
Order
employment and
submitted.
again
Order
felt roughly in
filled.
balance
I
with
probably
inflation.
shouldn't have let it.
Market
Just a
conditions have
chop.
generally eased. Unemployment rate has moved
Just
up,
a
but
chop.
remains low. Inflation has made
Too
progress
bad.
towards 2%,
I probably
but
shouldn't have
remains
let it
somewhat
fill
elevated.
because it should explode more than anything.
Fed says
But
they'll
you just
continue
don't
reducing bond
know. You
holdings
just,
at the
I was
previously announced pace.
willing to
Economic
take a
activity
shot
has
that
continued
it
to expand at a
might go
solid
in one
pace.
direction. Watching,
Fed
so the
adds that labor market
NQ, I
conditions
don't
have generally
think
eased.
there's
Unemployment
much
rate
to
has
do
moved up but remains low.
with the NQ now.
Fed notes that the vote in favor
The
of policy was
MNQ
unanimous.
didn't work either. Gold.
So looking to the markets now, some strength in the dollar, whipsawing in the S&P 500 as the Fed reduced rates as expected. And again,
Looking at gold for a
references to
minute,
having gained greater confidence
it
in
had a
inflation
big push
moving
up.
towards target.
Is it going to go test the PP, or is it going to continue down? The NQ is literally just chopping around where it was. Now maybe it's pulling down a little bit. Not a lot of action. That was a concern that I didn't think it was going to be as volatile as everybody was thinking. Let's take a look at the dollar futures. You know what? They're not coming up on my chart, so I can't show them to you. I'm sorry. They're not coming up. Too bad. Okay. It's almost like, let's look at a couple of other markets. ZB, even though most of us can't trade ZB. ZB, looking at 2 o'clock, 02, ZB looks like it might have been a very interesting, good move possibly there. Keeping an eye on
Losses
gold
after the
at
Fed
the
rate
moment.
cuts. 10-year last down 6.7 basis points.
ES looks like a whippy, just a up and down candle. Looks like one of those up and down candle days. I'm pretty sure if I look at the YM, it'll be the same. Okay, same. I bet if we look at the euro, let's see what the euro shows. A little bit more like bonds. Possible euro trade
US
there.
Treasury 2-year yield cuts losses after the Fed decision there, and the dollar pairs losses as well after the Fed cuts rates.
So the euro's moving pretty nicely. Gold, looks like gold is trending down. Pretty strong trend up on the day with gold. So just looking at possible other potential setups, the euro certainly a possibility depending on stop size. Bonds definitely possible. I mean, we know bonds move on these reports, and it looks like they did not have too bad of a whip in the initial look, but just a pretty mediocre move in general. Just not on the indexes anyway, on the indexes. So it is what it is. If everybody sticks around for a minute, I want to thank everybody on YouTube for joining us. That's our YouTube stream for the day. So thank you very much. I'm going to close our
More
YouTube
comments from
stream
Russia's Putin, who says that we had to take
and
into
thank
account nuclear
everybody.
arsenal of Great Britain and France when
So we'll see you
discussing
next time.
strategic
Keep an eye
nuclear
on your
stability.
email and appreciate you very much. Hit the like button and subscribe so you get